Nearly 80% of Forex traders are now using funded accounts, but here is the cold, hard truth. 90% of them will fail. They don't fail because they can't trade. They fail because of minor, avoidable mistakes and a lack of discipline. Welcome back to NextGen Finance LT. I'm Nirosh Kamara, and today I'm pulling back the curtain on my own journey. How I blew 10 accounts, survived the My Forex Funds collapse, and finally mastered the discipline needed to trade for firms like Funding Pips in the fivers. If you're stuck in a cycle of buying challenges and losing them, this video is for you. Why do we even use prop firms? It's not just about the capital, it's about the structure. In a personal account, you can trade until you hit zero. There's no one to stop you from revenge trading. But funded accounts have hard boundaries, the daily and total drawdown limits. These rules aren't just restrictions, they are your training wheels. They force your subconscious mind to respect risk. If you can't respect a 5K limit, you'll never respect a 100K limit. Why do we even use prop firms? It's not just about the capital, it's about the structure. In a personal account, you can trade until you hit zero. There's no one to stop you from revenge trading. But funded accounts have hard boundaries, the daily and total drawdown limits. These rules aren't just restrictions, they are your training wheels. They force your subconscious mind to respect risk. If you can't respect a 5K limit, you'll never respect a 100K limit. Let's look at Funding Pips. They offer everything from 5K to 100K accounts. Pro tip: don't jump into the 100K account because of the prestige. It costs $444. If you haven't received a payout yet, start with the 5K account for just $36. The goal is scaling. Use the payout from a small account to buy a bigger one. If you can't pass a 10K challenge, you are just donating money to the prop firm by buying a 100K one. This is where most traders get it wrong. Let's say you have a $10,000 account. Your daily limit is 5%, $500. Most traders risk 1% of the total balance, $100. Don't do this. You should calculate your risk based on your drawdown limit, not the total balance. Treat it like a $500 account. If you risk $100 per trade, you only have 5 chances before you're dead. My rule: set a personal limit. If the firm allows 5% daily loss, I stop at 1.5% or 2%. On a 10K account, if I lose $150, I close my laptop. I walk away. This ensures I never even get close to the firm's hard limit. Funding Pips has some specific no-go zones. No hedging. Don't open a buy and a sell on the same pair simultaneously. Layering. Keep it clean. Max 3 layers per trade. If you start laddering in, your second lot size must be smaller than or equal to the first. Never increase your lot size as the price goes against you. That's gambling. News trading. This is a big one. You cannot open or close trades 5 minutes before or after high-impact news. You can hold through it, but no new executions. Set an alarm. At the end of the day, you don't need a funded account to be a trader. You can start with $30 of your own money. But if you want to trade 6 figures, you have to act like a professional. Respect the rules, start small, and treat the drawdown like it's your own life savings. If you found this helpful, hit that subscribe button for NextGen Finance LT. Join our community in the description, and I'll see you in the next trade. Good luck!